Hello, everybody. Adam Bergman here, tax attorney, founder of IRA Financial. In today's video, the best way to hold Bitcoin in an IRA. And wanted to do today's video for a number of reasons. Number one, Bitcoin is having a big run, right? It finally hit 60,000. It actually hit close to 63,000 today, February 28th, 2024. And a lot of momentum, and we're getting a lot of interest, a lot of demand for investors using their retirement money to buy cryptos. And this is on top, obviously, of a ETF that has recently launched where you can now purchase Bitcoin through an ETF, an exchange traded fund, where you are owning shares in a fund that holds actual Bitcoin, which is honestly a great way to invest in Bitcoin. So I'm totally in favor if clients want to use their retirement account to buy Bitcoin in an ETF. I'm totally in favor of it. Even if it doesn't involve using IRA Financial, that's fine. There's 65 million IRAs. The majority of our business is not for cryptos. So we want people to be able to invest in whatever they want, as long as it's permitted by the IRS. And cryptos since 2014 have been permitted and treated as property by the IRS. Just like stocks, you can buy Bitcoin and other cryptos in a retirement account. So whether you're buying an ETF or through our partnership with Bitstamp or through an LLC, as long as you want to invest in it through your retirement account and you understand the risks, the volatility, and you are doing it for a diversification play or just you believe in the value of Bitcoin, that's your right as a retirement account owner. So today's video is about exploring the different ways that you could use a retirement account, an IRA or 401k, Coverdale, HSA to buy Bitcoin. So I'm going to kind of tackle really 3 ways to buy Bitcoin in an IRA. And just going to obviously start with basic disclaimer. It's risky. Right? I don't think anyone should put all their retirement money in cryptocurrency or Bitcoin. I think that's probably not a smart move. I'm just a tax attorney. I'm not a financial advisor, so I'm not giving anyone any financial advice. I'm just going to explain the tax advantages of buying cryptos like Bitcoin in an IRA and talk away the different ways you can hold it based off IRS rules and tax court law. That is my job. So the first way to buy Bitcoin in an IRA is directly on an exchange. Okay. And I've been working in the crypto space since around 2015. We were one of the first self-directed IRA companies to allow our clients to buy Bitcoin and cryptos through a retirement account all the way back to 2016. I wrote the first book on how to use retirement funds to buy cryptos back in 2018. I started working on the book in 2016. So I published it in, I believe, the beginning of 2018. Hard to believe, it was 6 years ago. A lot has changed, including the price. So the best and most popular way right now is to hold and buy cryptos on an exchange in a retirement account. We have a partnership with Bitstamp. We picked Bitstamp. They're the 8th largest crypto exchanges in the world. Been around since 2011, and we value their safety, their security, and they're just been a really good trusted partner. So you go on our app, our website, and you can actually link through our app and purchase Ethereum, Bitcoin, all the major, most popular cryptos directly via Bitstamp. And why is it so tax advantageous to buy and hold cryptos in a retirement account? Is because there's no tax, right? What's an IRA? An IRA is an individual retirement account, and there's 2 advantages to saving through an IRA. Number one is you get a tax deduction for making IRA contributions. If you use a Roth IRA, it's after tax, so there's no tax deduction. The second tax advantage of using an IRA is that your money grows without tax in the IRA. That is known as tax deferral. Whether you have a traditional IRA or Roth IRA, inside of that retirement account, in the ecosystem of the retirement account, there is no tax. So if you buy and sell Bitcoin or stocks or real estate, whether you're selling and doing 1 transaction a day or 10 transactions a day or 1,000 transactions a day, there's no ordinary income, there's no short-term capital gains, and there's no long-term capital gains. Okay, whether if you bought stocks or real estate or cryptos In a personal account, if you held that underlying asset, that stock, that piece of property, that cryptocurrency, for less than 12 months, that is known as short-term capital gains, and you would pay ordinary income tax on your gains, okay, which can go as high as 37%. If you held that underlying asset greater than 12 months, you would pay long-term capital gains, which has a minimum tax rate of 15%. If you transacted in an IRA, you pay zilch, zero tax, okay? Whether you transact once, 10 times, 50 times, whether you hold that underlying Bitcoin or stock or piece of real estate for 1 day, 1 month, 2 months, 7 months, 12 months, 25 months, zero tax, okay? So in the case of cryptos, in my personal opinion, I hope I'm right, we'll see, is I'm a big believer in Bitcoin more than any crypto, although I own Ethereum and some other smaller coins, but I've largely sold a lot of my smaller tokens and really focus on Bitcoin and Ethereum. It's 95% of my holdings. I believe, this is my personal opinion, not giving anyone financial advice, I personally believe the price of Bitcoin will hit $100,000 probably within the next 12 months. And I ultimately think it's going to reach 500,000 within 5 years. So guess where I hold my Bitcoin? You guessed it, in a Roth IRA. Makes sense, right? I'm 48 years old. I believe the future of Bitcoin and Ethereum is not today. It's not in 12 months, probably not even 2 or 3 years. It's probably in 10 to 15 years. Okay, I don't think we even perceive what cryptocurrencies or blockchain technology will be used for. I think that's yet to be determined, but I am optimistic of its utility. So if I'm going to take that bet and make that gamble, from a tax standpoint, as a tax lawyer, I have to do it in a Roth IRA, right? If I did it in a traditional IRA, I pay income tax when I sold it after 59.5. If I did it in a personal account, I pay long-term capital gains, 15%, or if you are in a high income bracket of over approximately 650K, you can go up to about 23.8%, including Obama tax of 3.8%. So if I did in a Roth IRA, I pay zero tax. And if I die and hold it, my spouse will get a tax rate. And if my spouse dies and has the cryptos, goes to my kids tax-free, and they have 10 years to take that Bitcoin or Ethereum or any other crypto out tax-free. So from a tax standpoint, it's the smart move, in my opinion, to hold Bitcoin and buy cryptos in a retirement account. Now, it just makes sense. Why? Because the future, I think, is bright for cryptos. The future is not tomorrow. It's probably within the next 5, 10, 15 years. And I think that really meshes really well with the whole concept of retirement saving. The whole concept of retirement saving is that you have to be patient. You have to trust the process, right? You take advantage of an IRA or Roth IRA, you have to be over 59.5 to pull the money out. Okay, so for most Americans that are saving, whether they're in their 20s, 30s, 40s, or even 50s, that's 5, 10, 15, 20, 30 years away. To me, in my personal opinion, that really meshes well with Bitcoin and other cryptos. Could be wrong, right? Maybe the price in 10 years goes to zero. I don't know. But I'm willing to take that bet in a Roth IRA. And that's an important point. I have not put all my retirement account in Bitcoin or cryptos. I've diversified, and I put a percentage, a small percentage, and a percentage that I'm comfortable with into cryptos, which are risky and volatile. And my bet is I'm going to own it, which I do, in a Roth. So if I hit a home run, which I hope I do, it's all going to be tax-free. Whereas if I did in a personal account, I'd be subject to long-term capital gains. And since all my other retirement accounts at that point are in more traditional investments like stocks or ETFs, I wanted to diversify. And I wanted to own some real estate and also Bitcoin and Ethereum, just from an overall diversification play. So since most of my savings are in traditional investments, whether it's personal and retirement account, for me personally, I think it's important to diversify, and having cryptos in a Roth IRA as a tax lawyer just makes too much sense. So that's the way I hold it. That's the way I think it makes the most tax sense. If I'm going to lose, I'm going to lose. Yes, I won't get a capital loss, but I'm playing for a grand slam. I'm not playing for a single or a double. I plan on not selling my Bitcoin until it hits 500,000. Whether that's in a year, 5 years, 10 years, 30 years, I don't care. I'm never selling it. That's just me. Now, you may say, I don't care, Adam. I'm going to sell it when it hits 80 or 100 or 200. That's fine. But if you sell in a Roth IRA, it's tax-free. If you're 59 and a half and the Roth's been open 5 years, you can pull all the money out tax-free. So as a tax lawyer, I look at things differently than most people. And from a tax standpoint, owning Bitcoin in a Roth IRA is, to me, the ultimate way to do it. Now, I own it on an exchange. Okay, so that's the first way, right? You go to IRA Financial, you open an account. We charge a flat fee. It's $100. We do have a trading fee that deals with Bitstamp. We have no annual custody fees, no asset valuation fees. So if you're a hodler, if you're holding Bitcoin like I am, you are not going to find a better place to hold Bitcoin or Ethereum or any other crypto in the country. Straight away. $100 annual fee, no asset valuation fee, no annual asset custody fee. Almost every other IRA platform out there is going to charge you almost a 1% annual asset custody fee, which, think about it, if the price of Bitcoin goes up, now it's at 60, let's say it goes up to 100, 1% of 60, that's $600. I'm charging you 100. 1% of 100, it's $1,000. So these custodians are making money as the Bitcoin goes up, even though they're doing nothing, right? They're not giving you investment advice. Their IRS administration work isn't getting harder because the underlying Bitcoin price is going up. Of course not. It's the same 5498, same 1099R. Nothing's changing. They're just making more cash, more fees, because you picked the wrong custodian to use. You have choices, and I have a big issue with that. And I've done a bunch of videos on this over the years. We have flat fees. Our fees for IRAs, big cryptos, are low. They're $100 to set up. There's a trading fee, which goes to Bitstamp. And then that's it. We don't charge you more because Bitcoin or Ethereum goes up. God bless you. I hope you make $1 million in your cryptos. I don't need to make more money. It's a self-directed account. You're the one buying the cryptos. You're trading. I'm not allowed to even give you investment advice if I want it. So why should I charge you more? That's unfair, unethical, actually. So if you're going to hold Bitcoin or Ethereum in your IRA, you're not going to find a better place than IRA Financial through Bitstamp. You're just not going to. From a cost-effective standpoint, you'll see. Wait till you start paying your fees, and you're like, oh, Bitcoin's at 60,000. Wait, I have to pay these guys $600 a year for what? They're stripping your profit away. They're stealing money out of your IRA. So just, it bothers me, and that's up to you, but you have your choice. You can pick any custodian. I think we're the best one. We have 25,000 accounts, over $3 billion in assets, but it's your choice. So that's the first way. The second way to do it is through the ETF, which I mentioned, and I'm all in favor of that. I actually own some Bitcoin in the ETF. I wanted to check it out, and I did it, and it was easy, and that's cool. I have nothing against it. The advantage is it's easy. The fees are very minimal. The disadvantage is, what do you own? We're assuming that these ETF actually own the Bitcoin. They're regulated. We have to believe that. But it's a good solution. I have nothing against owning Bitcoin ETF, nothing. So I don't really see a negative, assuming that these ETFs actually own the Bitcoin. They're easy to get in and out of. The fees are low. It's a good option, okay? Thirdly, owning cryptos in an IRA LLC and taking control of the private key. Okay, this is a very controversial aspect. I think you should be able to take personal control. I have clients, I get 50 calls a week from clients saying, Adam, I want to be able to do this. Used to do it with Gemini. Why can't I do it now? Well, Bitstamp, we're working on a solution that's going to allow you to pull the cryptos off the exchange, but also have a dual control, dual multi-signature approach so that you'll have a key, the custodian will have a key. And the reason for this is something called the McNulty case. This is a 2021 case that focuses actually on precious metals. Again, I've done lots of videos, podcasts, and blogs on it, but I'm going to repeat it since it's about 2.5 years, actually almost Yeah, it's almost 3 years old. I mean, 2.5 years old. And this case came out, and essentially these McNulty's got some bad advice, and they bought precious metals and coins, and they held them in their home, okay, through an IRA LLC. They didn't use IRA Financial, trust me, because we would have told them physical possession of precious metals is not prohibited. It's prohibited under Section 408M. You have to hold metals in a depository, U.S. trustee. It's in the tax code. Simple. They didn't. They got caught for whatever, however they got caught. They got caught. And the opinion letter was pretty broad. And what it said, at least the tax court said, hey, you cannot have unfettered command over an IRA asset. Now, they didn't specifically restrict that statement to metals. They just said you cannot have unfettered possession, unfettered command over an IRA asset. So once that came out, a lot of tax professionals said, hey, if you own cryptos in an IRA and you owned a cryptos, on a cold wallet, pretend this is my cold wallet, and I have cryptos on it, right? It's in my pocket or in my house. Do I have unfettered command over that crypto in my IRA? You probably do, right? I mean, I can move it. I can just transact it from this wallet, and I can move it to John Doe or Jane Doe. The custodian has no control. And that is a concern from the IRS's perspective. Why? They want to make sure the custodian has continued custody of that asset. That's why, from the case of precious metals, they want it in a U.S. depository. They wanted the custodian to have more control. Now, that is unique. It should be unique to precious metals. There's not a lot of tangible personal property you can own in an IRA, right? Metals is one of the few. Like real estate, you can't put real estate in your pocket. You can't put private equity investment in your pocket. It's very rare that you can invest in a tangible asset. We know the tax code does not allow you to invest in collectibles like baseball cards or antiques or stamps. Well, there is an exemption for metals, but it has to be held in the physical possession of a depository, U.S. depository. So cryptos, my point is cryptos are unique. They're intangible, right? You can't touch cryptos, but you can actually hold an intangible cryptocurrency in a tangible wallet. We know it. I have it. So how does the IRS address that? Now, it's interesting. The McNulty case does not mention the word cryptocurrency even once. It focuses on metals and IRA tangible assets. So you can read McNulty and say, hey, McNulty says you cannot have unfettered command over the IRA asset. Point blank, that's it. Sentence, stop. Or you can read McNulty to say that is a case about tangible property like metals. Cryptos are intangible and they are unique. They're unique in the fact that they are intangible, but they're actually traceable under blockchain, right? If you go to blockchain, you can see, if you know the wallet, you can follow the cryptos, right? If I know that John Doe has wallet 1, 2, 3, 4, 5, 6, 7, I can follow that wallet and I know exactly where John Doe is moving the cryptos. Now, if you don't know who owns the wallet, you can follow the wallet, but you may not know if the wallet's in America, Canada, or Ukraine, right? Who knows? But you could follow the wallet. So the interesting thing about blockchain is from an IRS audit perspective, it does give the IRS audit opportunities, right? The ability to survey and audit where that wallet has gone. So if the IRS knows that Adam's IRA is in wallet 1, 2, 3, 4, 5, 6, 7, then they could perfectly see that crypto in the wallet was never moved. Or on the flip side, they can see that I did move it, and then they can trace it and say, oh, you moved it back to an exchange, or you moved it to your son who just used it to buy a Ferrari, so that's probably not a very good thing. So my point is, unlike metals where there's no tracing of it, if you held metals in your basement, you can literally just sell the coin at a coin show and no one would ever know, right? And you can pocket the money. With cryptos, you can't do that because there's blockchain. The blockchain will demonstrate where the cryptos were moved from wallet to wallet. Now, you have to know who owns those wallets, but at least you can survey and audit the crypto. And I think that's a very important point, why cryptos are not tangible and why they should be treated differently than like metals, for example. And for example, treated differently than unfettered command rules as per the McNulty case. Now, there's no direct IRS guidance on holding cryptos in a cold wallet. Okay. Obviously, the safest approach is don't do it. That being said, we all experienced FTX. We all heard about BlockFi and Celsius and other exchanges that have dealt with problems with the cryptos on their exchange, whether it's through fraud or other means or just poor regulation. There is a social and public interest in having the capacity to hold cryptos off an exchange in a safe and secure fashion. Now, how will the IRS address that? We don't know. I could tell you, just knowing the IRS, working with them, being a tax lawyer for 23 years, being in the IRA space for 14 years, they would certainly much prefer you hold the cryptos on an exchange. That's certainly the most trusted approach, whether it's an ETF or whether you hold it directly on a IRA Financial BlockFi IRA Financial Bitstamp platform. That's preferable. Now, what would they say if you moved it off to an exchange? They could easily argue McNulty, and that would probably be a fair approach. But I do think you have certain defenses, i.e. the defense of blockchain. You also have the argument of the public policy and importance of having more control over the cryptos because of the history we've all experienced with exchanges, and the fact that cryptos are not tangible, right? They are intangible, so it's a totally different asset class than metals or other traditional IRA assets. That being said, I don't know how the IRS would react. There's no direct IRS guidance to any case or any private ruling on the ability to hold cryptos in a cold wallet. So my personal position is I would prefer my clients hold them on an exchange where the custodian has direct control. Again, whether it's IRA Financial or through an ETF, that's probably the safest approach. Now, if you are very, very focused on holding Bitcoin, the keys yourself, right? The whole concept and the idea of no keys, no cheese, right? If you don't really own the keys, you don't really own the cryptos. I get it. I own private cold wallets. I am a firm believer in that. I'm just not sure how the IRS would address that. Just perfectly honest. As a tax lawyer, I'm not going to sit here and give you false rhetoric. That's not my job. I'm going to outline the rules, lay the foundation, give you some thoughts, some ideas based off my tax knowledge. But ultimately, in this case, there's no direct guidance. The safest approach, I can tell you, is hold the cryptos on an exchange, whether it's through an IRA Financial platform or an ETF. But if you are really, really focused and really concerned about security and feel safer with holding the wallet or the cryptos on a cold wallet, there is a way to do it through an IRA LLC. We're at this point not allowing our clients to pull the cryptos off the exchange for a number of reasons. Number one, we want to have more direct control. We want to make sure we can comply with McNulty. Now, if you set up an IRA LLC and do it on your own, then you as the manager have the ability to do that. We are not going to be able to stand in your way, and that's your right as the manager of the LLC. I can't guarantee that if you get audited, you would be successful in defending your position, but it is your right as the IRA owner to do that. And we're not going to stand in your way or stop you, but you're going to have to do an IRA LLC or a trust, IRA trust. And the way that works is you would set up an institutional LLC or trust account. We would link the money from your bank account to the LLC. Then you would link the LLC bank account to the exchange, whether it's domestic or foreign. And then you as the IRA manager will have the ability to control that LLC bank account. And from there, you can move the cryptos off the exchange. And then it's up to you, to potentially support that position if you were under scrutiny from the IRS. We are working on a multi-sig approach that would give, or a multi-custody approach that would give us a key and you a key, so we'd have continued unfettered command. You'd be able to technically break it if you had to. Third World War III erupts and you need control, you would be able to take a distribution and break that glass. But at least if you didn't break it, we still would retain that chain of custody, which based off McNulty is something the IRS certainly is interested in. So those are the three ways to hold cryptos in an IRA. Just to recap, directly on an exchange through an IRA platform like IRA Financial, ETF 2. Thirdly, self-directed IRA LLC or self-directed IRA trust, where you can open an institutional account in the name of the LLC or trust at a U.S. or foreign exchange. And then as the manager or trustee of that trust, take the authority into your own hands to determine how you want to hold those cryptos, whether you want to retain and maintain them on an exchange or move them off the exchange into a cold wallet, which you would control subject to potential scrutiny. If you ever were audited by the IRS, you would have to defend that position, which again, I would be interested to defend that position because I do believe that blockchain gives the IRS the audit trail they need, right? The whole idea and their whole concern with metals is like, hey, once you take it, we don't know what you're going to do with it. And that's why we don't want you to have unfettered command. But with blockchain, there is an audit trail. You can prove to the IRS, hey, Mr. Agent, Mrs. Agent, here's the wallet. Here is proof it never moved. How could you audit me? How could you say that I took control and I used it for personal use when clearly the cryptos are still in the wallet? Here it is. There's the blockchain. There is zero proof. And here's the evidence. It never moved. And I think you would be successful. I would love to take that case, actually, pro bono. So I hope I don't have to, but if I did, I would enjoy it pro bono because it would be interesting. I think we would win. But ultimately, if you don't want to take that risk, I get it. Keep it on an exchange, buy an ETF in your IRA for Bitcoin. That's cool. Now, some people don't want to buy Bitcoin, right? There's an Ethereum ETF that eventually will get launched in the coming weeks or months or years. But let's say you want to have more of a third party, a smaller type of coin, altcoin, where there's no ETF for, you have two options, right? You can hold it on an exchange like Bitstamp through IRA Financial, or you can do the IRA LLC Trust IRA, where you use an exchange and you take the cryptos off the exchange, or you just hold it through an LLC because maybe you want a foreign exchange, or maybe it's a crypto that Bitstamp or a different U.S. exchange doesn't offer. The IRA LLC or the Trust IRA would let you do that, where you'd be able to open up an institutional account and do DeFi or altcoin. So it's an exciting time for cryptos. Hopefully these exchanges get their act together. I really hope there's better regulation, and these exchanges have to prove their holdings and prove that they have one-to-one. And I think, FTX and BlockFi and Celsius, which is a wake-up call to the whole industry, that things need to be way better regulated if this industry will ever take off. But I'm very optimistic, especially the fact that the price of Bitcoin is improving and increasing, and that's super, super exciting. So it's a good time to be in the crypto world. It's been challenging the last few years, but I've hodled, and again, I hodl in a Roth IRA, because if you're going to hodl, if you take anything away from this video, I'd love you to be a client of IRA Financial. I think we're the best IRA company in the country, but whether you trust me and do it, or you do it through an ETF, or you use another company in the space, that's cool too. I just personally believe every American should put something in Bitcoin and do it in a Roth IRA, whether it's $50, 5,000, 50,000, whatever works best for you. I do not advise for people to put all their retirement money in Bitcoin or any crypto. I think that's a bad move. Even though I'm bullish, I think it's stupid. I think you should put 1% or 2% or a small percentage. So God forbid it goes down or goes to zero, God forbid, you can still survive and come back from that. If you put 100% of your retirement account in Bitcoin, it goes to zero, you're in bad shape. And that's foolish. You shouldn't put 100% of your IRA in any one asset. I don't think that makes a lot of sense. So that's my personal opinion. You are free to do as you wish. That's the beauty of America. You are an investor. You are free to invest as you see fit. But if you are going to buy cryptos, I personally believe you should do it in a Roth IRA, because you can lock in your tax-free gains so long as you're 59 and a half. The Roth's been open at least 5 years. it's all tax-free, and just such a great feeling. I can't wait. I don't want to get older. 48. I'd love to stay at this age for another 30, 40 years. It's fun. But if I did get older, the one advantage, every birthday, I'm just 1 year closer to 59 and a half, because, hey, then I can pull out all my gains tax-free. So if I needed a little bit of money here and there, I don't have to worry about tax rates or any of that nonsense. It's all going to be tax-free. Now, I hope I don't have to pull it out. I hope I got other money from other sources, and I hope Bitcoin and Ethereum keep going up so I can just keep watching it grow in my retirement account. And just, it's a great, 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 great feeling to know you have all this wealth tax-free. I promise you, like, I hope everyone gets to experience it, whether you own Bitcoin or stocks or real estate or a hedge fund investment, private equity investment, private stock investment. It is an unbelievable feeling, trust me, to look at your account and just be like, oh my God, it's all tax-free. It just adds like 20 to 30% of enjoyment to your already good feeling of watching your money grow. It's even more fun when it's tax-free. So that's it for today. I wanted to go live, and that's another reason why you should subscribe to this great YouTube channel, because I'll just go live randomly. There is another YouTube live scheduled for tomorrow, I think it's February 29th. So check that out. That's on the difference between the self-directed IRA and the self-directed Roth IRA LLC. Going to kind of go through the different structures, different tax strategies. So that's going to be a really good video. But the good news, if you subscribe, you'll get notified when I go live, because I'm going to go live more. I mean, sometimes I may do it 2-3 times a week if something interesting pops up, or I'm just want to go live. So check out our channel. We post 3 videos a week, generally a YouTube live, 3 podcasts, a lot of great, great content. If you're interested in self-directed retirement topics, there's no place that's better, I promise. I spend most of my time on this. And again, I don't know a lot about anything other than self-directed retirement accounts or taxation. So if you want to learn about self-directed retirement accounts, taxation, alternative assets, don't think you'll find a better place online. So check it out. That's it for today. Enjoy the Bitcoin ride. Let's hope it goes to 100K this month, or at least in March. And we'll keep praying for it. And think about that Roth IRA. Lock in that tax-free gain. I promise you'll enjoy the ride even more. Have a great day. Thanks for watching. And I hope to see everyone again tomorrow.